This is Justin Pulitzer. This is my weekend review video for Sunday, January 22nd, 2017. It is, however, being filmed on Saturday, the 21st. A good amount of stuff to cover, given even the narrow range in the market. A lot of the analysis is kind of similar to what I've done before, but there are some nuances and there are some new setups that I'm seeing that I think are worthwhile in terms of mention. So let's get through the 7 market keys and a couple of stocks that relate to them. We'll get through the major market indices, and then I'll try and get through as many of these momentum stocks as I can in a timely fashion. So we're in pure directional play range here. We are at the very low end of the volatility index. So a lot of people are trying to figure out the best way to play the VIX, and I don't necessarily know if we're going to get a big down move in the tape. If we started getting some closes above the 200 MA, you could see all the bounces have been kind of at or close to or just above and then stalled at the 200. So if we start getting some closes above the 200, I'll start thinking maybe there's a bit more of a decline coming and maybe a larger spike in IV. But as far as down here, some of the things I've noticed, and I'll talk about this in SPY, but I think the best way to play the volatility index is sort of through S&P or SPY options, not necessarily through VIX options because they tend to be expensive. And unless you really get an outsized move, there's really not that much to do. But we are in pure directional play here. Let's talk about the dollar. Dollar is important. We are basically retesting the breakout area. We had kind of come up from the bottom, and I think this breakout here was a little suspect. I've said for a while it's possible we see the 109s in the dollar, but it seems as though this day was a bit of a look above and fail, and now we're well below that range. So, I mean, as long as the dollar is really below this 101.95, I've been saying 102, there's potential for more pullback. And you can see the 50 MA, and we're starting to get 2 back-to-back closes below. So you really would need to start seeing us clear this 1, 2, 3, 4, 5, 6, 7-day consolidation. If you start getting back up above this 101.77 and above like the 10-day, 20-day, then I would start thinking maybe the move is back to the upside. But as of now, you have a downward sloping 10-day and a downward sloping 20 that are close, and I think that may provide some pressure on the dollar for a bit. Anything below the 50, I think, could potentially see the 100 MA, and that is rising and could potentially coincide with this like 99 half-ish level. So that's sort of a bit of a near-term target. One thing I'm noticing a little bit on this chart, and it's not really necessarily confirmed yet, but I'm starting to see maybe one of these, a head and shoulders top. So just keep that in mind. If this is setting up here, so unless you really negate this left shoulder here, and keep in mind that the peak of this is 102.12, and remember what I said about 102s, then I'm real cautious on the dollar. There could be, a considerably larger pullback if the Fed starts not talking so tough and is a little bit more dovish. We'll have to see how that goes. Yellen had some comments this week. They were widely interpreted by the media as hawkish. I didn't necessarily take it that way. I thought they were actually a little bit more dovish. So we're going to really have to see how the economic data starts playing out. And it's no coincidence to me that we're right kind of at the low of this bar here. This was sort of the big breakout bar that led to the breakout in the range. Anything below 26.03, and look where the Friday close was, 26.03 to the penny. This day here having been a look below and fail, some short covering here to the 50, a look above the 50 and fail, and that coincides right with the 10-day. So for me, if there was a move below Friday's low on Monday, I would think it could be a right or right out short, maybe for a move down to the backside of the old channel, the consolidation channel high. Usually those tend to bounce, but I think there could be a quickie short in that play. Back above Friday's high, though, could make a move back up to that 20 MA. So I really like Friday's range for right or right out type of trade. TLT, the bonds, we played this really quite well. I talked about kind of longing up down here and adding over the high and then getting out over here, which was smart. We're back below the 50 MA, and you have a couple of days, kind of like some doji hammers. So what's the play here? Remember the Fed day high that I talked about, 119.21? The low of day on Friday was 119.29. So if you want right or right out action, a move above Friday's high on Monday, back above the 50 MA, would be the entry point. If you get back below the low, then in my view, if you're still long this, I'm not, it's a hard stop. I think we would potentially retest the lows and maybe, who knows, even make fresh lows. But Friday's range, I like right or right out short below the 2-day low, and right or right out long really above the Friday or even the 2-day high. So that's my setup for the bonds. HYG, HYG. This is the high yield ETF. And when you start seeing this kind of action, you want to start worrying. This was the oil catastrophe pullback. I think a lot of hedging has gone on in oil since then, and I don't think that those companies have the same type of an exposure. Keep in mind here, you had a downward sloping 200 MA. Now it's upward sloping. So is the 50 and the 100 MA. My thoughts on the HYG for trade setups. You're holding the 20 MA here. You had a big bounce here and this day here. So above the 2-day high, above 87.30, I like for a right or right out long. This to me would have been a false breakdown, and I think we'd come back up hard. Below the 2-day low, 86.94, there could be a little quickie short, maybe down to the 100 MA. Look where this kind of resistance was. It might want to be retested, and I would be interested in maybe selling some near-dated out-of-the-money puts. Look how the 50 was support here. It should be support again in this area. So if there was a, I like I said, over the 2-day high, I like long. Below the 2-day low, I like for a quickie right or right out short. Oil. So oil has been, it's been, I don't know, a little bit whippy up here in this range. You had this like gap up. This was the non-OPEC producers cooperating with OPEC, and it's come back down and then up again and now back down. This day's range to me is the key. The low is 52.11. The high is 55.24. You had a couple of days here which were below, a hard reversal back up, and now consolidating above the 55.22. So, and you can see this Friday's day range is very key. I'll keep it simple. Above Friday's high, I like long. Below the low, I like short, maybe for a quick move down to the 50 MA, which would coincide with a retest of those lows. That's my trade for that. Exxon has been a big tell in oil. It's actually pulled. Oh, what's going on here? Cancel. We don't want to put in a order there. Oh, I still have my drawing tools. Ay, come on. Give me a break here. Let me, there we go. So look at this. We have a trend line coming up. You also have a lot of reference lows down here in this 82 region. I like selling out of the money puts sub like 82, 82 and a half strikes. We've come down really. This was the Tillerson gap, and now we've kind of given it all back and then kind of some. I actually thought this range would hold, but we're now back into some big reference levels. So what now? We had the gap fill, a responsive move higher, and then a consolidation, and then this big bar lower, which kind of broke the range, and then Friday was back up. So this day to me is the breakdown day, and that is the key range. You have a 2-day 2-day range, and if you can get back up above the high of day from here, which was 86.10, I think the play is back long. This to me would have been a false breakdown. If you get below the 2-day low, we're really close to trend here. I don't know. 83s were a big level. I'd probably start getting interested in maybe selling some more out of the money put premium, but I'd be cautious with this trend line because there could be a full snap down to these 82 lows. I think a lot of people will get very nervous down here, and I think if there was actually a breakdown on that, it wouldn't be very long-lived just because we've come down so far all the way, and really without, I mean, you had a little bit of a rally here, but it's been so much down moves, and look with the stochastics, we're getting bombed out. One thing that I thought was encouraging on Friday, look at the volume bars. This was the day of the breakdown of the range, and the volume that day, Thursday, was less than the rebound from Friday. So this 2-day range to me is really going to be very key as far as the play in Exxon. So keep an eye on that. That's very, very, those are going to be very important. XLE is just doing what we had discussed, which was gently pulling back. We're still holding the 50 MA, which has been very kind of key support recently here since the breakout. Look at this false breakdown, and then the gap back up was at the 50 MA. So you have multi-days here. If you lose the 50, there could be a quick short down to the backside of the old consolidation funnel. Often you get the breakout, the check back, and then a rally. We're in a mild pullback channel. You have 100 MA down here, which has also been kind of some key support. I'll keep consistent with my thesis. If you lose 50s, we see hundreds. If you lose hundreds, you see 200s. I would love if the 100 coincided with the backside of this channel. So below these 2-day lows, I think you could try a right or right out short. Above the 2-day high, I think it's probably going to be a long. These couple of day ranges are often very, very important. XOP, also a key here. Look at this. We have a bit of a mild downtrend, and this has been holding the 50, and look, broke over the downtrend channel. It stalled at the 20, so anything above the 20 I like higher. Again, below the 50, I'm going to start thinking lower again, and maybe a trend touch. We'll see how that plays out. Alrighty, IBB. This has been very choppy and messy, and I really haven't been participating in this in quite some time. I had called this head and shoulders breakdown and check back. This was just a complete disaster. I think a lot of this has to do with the fact that a lot of these companies might be facing peak drug earnings. I feel like the drug companies are going to be kind of like the new banks. They're going to be the ones with the regulation and the whipping post for politicians. That said, we're right at some key support. I think if you want to take it long, we're in this this consolidation pattern. So if you want to try a right or right out long, I think down here near this kind of range breakout, old range breakout, and the triangle low would be the spot for maybe a play back to the top. But if you're more conservative, you'd be looking for a breakout of the triangle for a play down to the downside, or a breakout of the move to the upside. So I like right or right out play of triangle extremes. Careful with the head fake here. You might want a little confirmation. I think the reason this didn't break out, this was a false breakout and it was met with violent selling, was because, look, you came up from the bottom. Now you're coming down from the top. So could be a quick right or right out day trade. Even below, if it's straight, could be a good short-term out of the money put sale. But I really want to see how this triangle resolves. 200 MA is key. It seems to be a little bit of resistance. Below the 200 to me is a little bit vulnerable. So that really has to be a tight leash if being played. The disaster du jour has been this Bristol-Myers squib. I think they're still squib. Yeah, Bristol-Myers squib. This came down from the top and this was a 38.2% fib retracement. I thought it was going to get to about half, which was close to the 200 MA, but we had that news about Merck and their lung cancer drug. There was a gap down followed by a move to the 100, and then this move down here on them pulling some BS with not putting their drug in for some double study or what have you. So I think we are coming to a point where this is going to set up soon for a right or right out trade. Now, it's either going to be here at these double lows, and I would feel more comfortable, honestly, paying up over this day's high. Like if we were to do Monday or Tuesday over, you could buy stop at over 50.69 maybe for a gap fill, or a little bit lower. And I want to show, I don't think a lot of people are seeing this. Let me do it on a weekly just so we're not dealing with as many bars. Nope, not long enough. Let's go 10-year weekly. There's a good girl. All right. Look at this. This has been a very defined trend line for years. You can see. We haven't tested it in a while, and look where it coincides with. The 50% fib, these lows, this kind of breakout, and the 50% fib of the entire range. So I either like this right or right out with stock or selling out of the money puts. If this were to snap, we could see the 61.8, which is a considerable amount lower. But again, keep in mind, this will be coming down from the top, and it is a multi-year trend line that has held for a while. So I like this area and these 46s for a right or right out place. I think we're within $3 here of a potential good setup. So either over Friday's high on Monday or Tuesday or whenever it happens, or down at the 50% fib. I'll either be selling at the money or out of the money puts, or maybe trying with shares. We'll see how I wind up doing that. I'll probably comment on it at the time. I want to just mention this cafe. I've been long cafe for a little bit. Let me get in here on this 9-month. I've been meaning to talk about this. I just keep forgetting because it's like it's not really a big position of mine. I actually got in on this day. I actually paid pretty much at the high of day. I had put in a buy order in a while back because I was counting on it hitting trend here, and it didn't. And it did it this day. I stuck with it even though we had a couple of days lower, but I figured we came down so far so fast that this breakout here was false, that I thought that this breakdown would be false. And we're now back in, and we're into fibs. I like that we're above the 50 MA because that was the breakdown. I'll stay long this as long as the 50 holds. I'll be looking to book some profits. Look where the 100 MA was key, so somewhere between the 100 and the 50% fib, and maybe even the 61.8, just because we were coming down from an all-time high, and this was the true breakdown. So somewhere between the 100 MA and the 61.8, I'll be lightening up into that region. But that was cafe, one I've been meaning to mention for a while. S&P land. All right, so what is going on in S&P land? There's a few things to note. One is that we've been in a very mild compression range, and this all has to do with the Fed day range. Was that? Let me just see. I want to just check the date. The Fed day range was from 12/14. We're going to come back to this graphic in a moment. 12/14, that was the Fed day range here. Look where these hammers have been, and look where we've kind of stalled out near the upper end of the, I guess, body of the Fed day range. And if you look in ES land, let's go back to that quickly. Look where we stalled on Friday's high of day. Don't mind my alerts here, but that was the Fed day high. I want to go back even a few more days. Look where we stalled here. Again, the Fed day high. Look above and fail here. Look above and fail. These moves have been met with swift sell-offs. And it seems to me that we just ping from one end of the range to the other. Like, look back here. This took you down to the Fed day VWAP, which held, again, bounced, again, bounced. So we're starting to, and here it kind of gave, but we closed firmly above it. So I'll keep it really, really simple. As long as we're below 2272.5, we have to remain in caution mode. If we get above there, I get a little bit more bullish. I'm kind of medium around the Fed day VWAP, And then the Fed day low is 2243. The last low we had was 2248. But you can see we kind of get close. So we've just been banging around in range. So Friday was a doji. And you've had now, let's see, one. We'll call this 2, 3, 4, 5, 6, 7, 8, 9 days that have basically challenged the 20 MA. Here you had a brief breakdown, which was to the channel low. So Friday's range above the high, I like long because Friday's high of day in the ES, keep in mind, was the Fed day high. So I like above, and a break of the low I like for a right or right out short for probably a play down to the range low, and potentially if we get kind of cray to the 50 MA, the rising 50 MA. We haven't checked back to the 50 MA in a long time. Look at this. When we had this gap down, look how many times we stalled on the 50 MA. And this is when we fully broke out. It has never been retested. I do believe it is going to be retested at some point. I just don't know when. So I like long above Friday's high, which was 227.31, and a quick right or right out short below 225.97. I will caveat something. To get through 210 in SPY was very difficult. We had a couple of weeks with back-to-back pins, and until the bears really fully break the 25 strike, it's going to be very hard to get the market lower. If it breaks, then I get probably a lot more concerned about pullback. Look, we did test the channel high. I had said I thought it was an area to book profits. I said it would be a difficult short. It did work for a while, but you can see this has been very, very choppy in a very narrow range. I don't know that we won't have a big pullback to retest the channel low. That is possible. Look where this 61.8 fib coincides with. It could be toward the end of the year. I mean, who knows? That could be when another rate hike happens. And we are nowhere near any of these big fibs. So these moving averages up here become really rather important, considering the fact that we've broken trend, but it's more, like I said, more by time than by price. And we are just in a mild consolidation. I drew in a bit of a down channel, but it's really very mild. It's not steep. They often resolve very steeply, but until that starts happening, there's not that much to discuss with this. So, sorry, we're left with the Friday range. You can I would try a right or right out short below the low, and a right or right out long above the high. The expected move this week is $2.32. Given the fact that we are in such an extreme low in terms of the VIX, the IV, I take the move as sort of a cap for the upside move, and maybe I don't take it as seriously if the move is down. The move up would be to 229.06. The move down would be to 224.42. So that is the expected SPY move, and I told you how I will be playing. Remember I mentioned I would tell you a idea for either for a short idea, given where we are in the IV range, or as just a hedge, which I also condone. I like buying 225 puts, selling 220 puts, which was the breakout, 219.60, and then overriding it with selling 211 puts, which is really kind of down here, back near where this gap started. Given where the 200 MA is, I think you could, if you did that trade, you could roll those up to 215, because I do look where the 200 MA held it here, basically held it here with a kind of a quick look below. I would imagine that would be kind of the max downside, at least for a while, particularly if this fell out of bed like this, and given where the channel low is. So you can do a 225, 220, and then the overwrite being like 215, 216. This was the breakout here, 217s, really, 217s to 219s. That's how I came up with the other, the college strike, the 225 down to the 220, and then the overwrite would be at another technical support. I've been getting a lot of questions about how I play that. By the way, look where the 61.8 of the range is, and where these kind of pullback lows were, it's at 216. So that's why I like the overwrite strike being 215, 216, because it's around the 200 MA and the 61.8 Fibonacci of the range from the Trump low to the high, and this happens to be a channel low to channel high. So I think that fib is really good. So that's sort of the mind of the that's just how I think, the mind of the machine, right? That's what I'm going to start calling those trades, the mind of the machine. IWM, I remember when I made the call that we would see 138s, I was told I was crazy, a wild man, right? But it happened. It always kind of works out that way with me. We've been and I said it wasn't a short, that it was just going to be very frustrating, and boy has it. Below this low of day, though, I will say 136.01, I think you do have to be a little bit more cautious. And below the 134.81, I think you have to still be even more cautious. However, look what's here. I had said this, that the channel low and the 50 MA here, or right here, we've had one touch, and you're close. So what does that mean? You have this hammer here, 133.59. The low here is 135.44. You have a 2-day range here, and this is a big kind of outside day of the we're just inside it, and it stopped at the 10-day. So below the 50, below 133.17, I like right out short for a move maybe down to the channel low, and the gap fill where I would probably reverse and go long, or at the very least cover if you want to do it with puts. Pick a strike, sell 2 times out of the money in near dated, maybe same week or next week, and play it that way. You could do flies, buy puts, sell two times, and then buy down here if you collar it off for a margin account. But I really like the Thursday's range above the 135.44 long for a move back to the channel high, and below the low, I think would break. It could really break this channel and get a little bit more violent. The expected move this week is $2.17, so that would be up to 136.61 or down to 132.07. Keep in mind where we are in terms of IV, that move could be exaggerated more maybe to the downside. The Qs, been a lot of relative strength, although it's been kind of dojiing it up here. Still above the 10-day. I had cautioned that the 1.618 Fibonacci extension is coming up at 124.51. We're getting kind of close, and there's a channel high up here, so there could be an overshoot. But I do think that on pops in the NASDAQ, it's probably a good idea to maybe book a little bit of profits. It is possible we have some kind of major blow-off, and let me tell you, this week, Thursday in particular, I'm going to get to that. There are some big boy earnings coming up in Google and in Microsoft, and we are going to roll that beautiful bean footage quickly. Expected move is $1.58 to 124.83, which is pretty close to this 1.618 fib extension, and then down to 121.67, which is kind of like will coincide with the 20 MA. So we'll see. I think if Google and Microsoft are junk, we're going to see maybe a 50 MA, which will probably coincide with a channel low, wherever that may be at the time. Speaking of which, with your permission, please, I will go out of order. I actually had been planning on talking about, starting at the top of the key with Apple, but since I got into the Google and the Microsoft, let's just do it. So let me zoom in here. The last time Google reported, it was a mini look above and fail, which was a catastrophe and collapsed. It's since rallied back, and you've had a lot of days of consolidation here. We're getting close to the reference high. I'd actually like to see if Google would pull back. I think that this might be I feel like Google wants to go higher, but I don't know that. And I really would kind of rather wait until the number and then use that action to play Facebook, as crazy as that sounds. I like playing Google at the extremes, and we're nowhere near the extreme. This has just been choppy. Short term, You have a lot of consolidation here. 821 above there, I'm all right, still being long. Below there, like if this were to pull back to the 50 MA, I might be a little bit more interested in a right or right out trade. But if this starts getting close and breaking out of here ahead of the number, I can't say that it won't be a sell the news, but I do think that Google, there will be room in Google. This was a reversal day. I forget what the reason was. There was something that was going on. I remember I actually was away from I remember this day very well. I was actually dealing with some personal stuff, and I had seen how weak Google had closed, and I was really actually a little surprised. And then this thing was just it played out to the downside. So we'll see. We could be in double top territory, but I'm a little leery given how much we've run up ahead of the number. And like I said, I'm going to talk about Facebook in a minute. Microsoft. This, however, on the other hand, is looking a little bit more today. 2-year daily, maybe. All right. So we're getting close to a channel high. And I think that if I drew this in from, 20-year monthly, look at this. I mean, I kind of just connected these lows and then redrew as a channel. So we are above the old .com high. And we're now here with a bit of a doji. So what does that mean? It means I'm a little less, I should say, on the monthly, a little less bullish. On the weekly, zoom in here. This to me looks like you have a potential double top, right? At 64, this one was 64.07. So a little bit more iffy on the weekly. Now, on the daily, zoom in here, you just have a lot of chop and consolidation. So, what are my thoughts? My thoughts are these, that if this is going to go up, and there is going to be a gap, I think you can buy stop these highs. There's only a couple of smackers here, and I think that I'd rather be up over those. If you get over those, I think that this thing is going to have a blow off and go significantly higher. The 50 MA has been a hold. If you get a quick pullback to the 50, I think that there could be a day trade opportunity there for a right or right out play. I think it could run a lot of stops, which would be nice. I always like that shake and bake setup. Even if we were to get down to the 100 and retest the .com bubble high. So if you're bearish, I think you could play a put spread or a put ratio for a move down for that retest. If bullish, you could probably nibble it if there is a pullback to the 50, or if you want to use the 50 as your stop. I personally prefer waiting for a bust out over here, and then I think this thing would be gangbusters to the upside, and you could trade it in the after hours. I didn't write down the expected move, but I'll get to that this week when we get. What day is the Microsoft earnings? Thursday. So let's see how that trades into that, and then we'll talk about some trade setups for Microsoft. I'd love to also do some polling on that and see what people think. Facebook, we've come up from the bottom, we filled the gap, and we are chopping. I hate that this move ahead of the earnings, but I've mentioned a few. I think that this number one will move on Google. So if this rallies hard on Google, which it has done in the past, I think it could set up for maybe a sell the news on their actual earnings. The wildest thing that this thing could do, and I think this will suck in a ton of people if it did this, was to break the old high, squeeze all the shorts out, and people not realizing it came up from the bottom and get long at the wrong time. The good news is it will have made a new high, and then I think any pullbacks from that would be viable. But the danger this runs is that this does make a double top on the backside of the old trend. Look where this stalled. And it gets up here and everyone thinks it's hunky-dory, and then either it pulls back or it stops at a lower high and pulls back. In the very short term, you have 5 days of consolidation. I like long above those highs, which is above for a short-term trade of 129.27. I think could be a move to the backside and a retest of the old highs. Below the lows, I think could be a quick short down to the 50 MA, where I would be looking to cover or to maybe even reverse and go long. Earnings aren't for another couple of weeks, so this will move on Google. It'll probably be a go with on the Google number, at least short term. But I want to kind of be the Costanza on the actual earnings. I think that would be a setup. We'll talk about Facebook trades, specific earnings trades, when we get a little bit closer to the print. So let's talk about Apple. But to talk about Apple, you sometimes have to talk about their suppliers, and it's kind of like the chicken and the egg. The suppliers, Apple suppliers, which is which. So Skyworks has come down quite a lot. This set up for a cup and handle kind of play, and it gapped to the upside, no surprise. However, there was an old trend line which this broke, and we are getting close to the backside of it. The neckline of the breakdown is a little bit higher, as is the 61.8% Fibonacci retracement of the entire breakdown. So we may be going higher, but maybe not much. I'd probably be looking to book some profits into this area up here near the 92s, 58 to 92s. I think that would make some sense because, look, we came up from the bottom. Remember what I say, this spent a lot of time consolidating, but we are up a lot. If this were to come back here and fill this gap quickly, I think around the 200 MA, wherever that would be at the time, I'd be an interested buyer, or if it filled the gap quickly, a put seller. It might overshoot a little bit. So I think Skyworks, unfortunately, we may have been the easy money in the Skyworks may have been already made by those who were bold to hold it into the earnings. Speaking of which, the Apple. All right, so there are some things to discuss here. This was a failed head and shoulders. It broke out. We are now above the head, so the pattern is bullish. 120 is this kind of big gap fill. It's a big volume distribution node. It's been a huge open interest in the calls, and I think that's what's been holding her back. I can't tell you which way the Apple earnings are going to go, but I can tell you a setup that I love, and that setup is the shake and bake. When it rallies, it has this kind of freak out, and then it gaps and goes on their actual earnings. So we've got some issues. One is that this is run again a lot, and I think any gap might be sold, like we kind of saw in Netflix. So it might be a little bit trickier to play. The fact that Skyworks ran should have people bullish up on Apple. There's not a lot of huge IV in the Apple options right now, so pure directional makes sense to me. 20 MA is held. That was sort of where this broke down from. As long as the 20 MA holds and the channel holds, I'm fine with buying the dips, but I don't necessarily know if I want to chase. If there is some kind of a gap up on Monday, I'm curious to see if that holds. If it does, above that high a day, like the opening 15-minute range would be a long, below the low would be a short. So that's my thoughts on Apple. We'll talk a little bit more about that when we actually get to those earnings. And we'll have the benefit of seeing Google ahead of time. But like I said, Google really reacts more with Facebook. All right, so Amazon. We talked about this being a long over the 50. I talked about I don't want to get into the option-specific play. I discussed that in Periscope. Go back to my Periscope this week. Let me just discuss it quickly. I had talked about selling 800 calls weeklies, which worked, and then using that premium to buy longer dated 820s, which really worked like a charm. This stopped really right at the gap fill. I thought it maybe would see the channel high, but I did say that this was the spot to kind of pull the trigger to get out. Worked out well. Not a lot of pullback, though. As long as you're above 800, like 84, let's just call it 800, I think it's okay. If you lose this breakout day's low, which is 799.5, it's a right or right out short for a pullback to at least the 100 MA, maybe even the channel low. I would love for that to happen ahead of the earnings. I think it would set up for a long. Unfortunately, I do think that this, I don't know if it's going to give that opportunity, and this could be a move higher into their print. Amazon killed it on their numbers. I really want to look and see what the sentiment is like ahead of Amazon and how many people are actually playing it long. If it's overly bullish, I'm going to probably be a little bit more cautious. If it does get the shake and bake, I would be more apt as a buyer. We have the benefit of a couple of weeks. Let's see how if Google blows up, this could take this down. If Netflix starts really selling off, it could take it down. I like to kind of wait to see the eye of the tiger, as they say. 50 MA was really the key. If there's any pullback to that, somewhere between the 50 and 100, I like the idea of using that as the opportunity to kind of buy the dip over chasing. Netflix, the aforementioned Netflix, they are just tearing up the dance floor, but they were met with selling. Why? Came up from the bottom. You had the move to the old high, and people used it to sell. So Friday was a bit of a look below that range that failed, and we closed inside that bar. So how do we play the Netflix? Simple, dimple. I like it short below Friday's low for a pullback for the gap fill, maybe, and then some to the 20, which would be nice. Above Friday's high, I like it as a long back to the upside. Inside of that range is a no touch, and we're going to keep it super-duper simple like that. The curious case of Tesla. Tesla, right? It's kind of fun to say Tesla. This is in a wedge, a narrowing wedge. I like that we're making some higher highs. I don't like that we ran from the low to the high. If this breaks out, I'll be really suspicious of it, particularly ahead of the print. I'd like some pullback here, particularly ahead of the number. A freak out would be nice, actually. I don't know that we're going to get it, but I do think that a couple of days of consolidation and then a break would propel this up to the 265 level with the quickness. So if you're already long, just you can use this Thursday range low, I think, as a stop, which is 40.75. Look where this breakout here was, 40.85. So above this day's high after a couple of days of consolidation, I think could be a long. Below the low is a stop out or a right or right out short if you want to play that way. NVIDIA, I've been waiting and patiently waiting for a pullback to the 50 MA. You had two look above and fails at the 20 MA. You have a 2-day range. I like it long over the 2-day range high and short below the 2-day range low. You have a double bottom here. This needs to hold. If you lose this and the 50 MA is there, I don't know that the 50 will hold it, and I think that this could be a move maybe even significantly lower, potentially even into the 80, what was this low here? 84.77, so like maybe 85. So this, what was the low? 99.11. This was 99.38. These double bottom area really needs to hold. So simple, above 106.80. I like long, back to the upside. I think could re-challenge even the old highs, and below the low, which is 102.98, I like short. 2-day range. Play long above, short below, keep it simple, stupid. ULTA. All right, so not one I cover a lot. This was one I liked years ago. I wish I just bought and hold this thing for like the rest of my life, but not the way it worked out. Very, very choppy. This was the last earnings. 50 MA held it, right? The VWAP of this day, believe it or not, is roughly, and I went back and looked before I recorded the video, it coincides well with the 50 MA now. I can't tell you how this is going to react on earnings. I can tell you that you're inside of this day, this huge bar, and it's been kind of whippy. There's no edge. I like it as a buy on trend and 50 MA for on pullbacks. I don't know that I'd be charging into it here. For some reason this was a mistake. I deleted it. Right now the price is roughly about at the 61.8. I'm sorry, the 78.6 of where this bar into this bar and near these reference highs. I can't tell you that this won't go higher, but I don't like buying it up after it's been up. Look at this pattern. It's been seesawing. I like a buy on the trend or near the 50 MA. That's just me. That's just that's the way I see it. Chipotle, not one I cover that often, and I will tell you I don't mess with this stock on earnings. It's a rule. If you ever hear me talking about Chipotle rules, please remind me of the rule that you do not play this stock on earnings. I've just been burnt very badly on it once, and once bitten, twice shy, I guess they say. It's in a range. It's seesawing. You have equal highs. You need to clear the 200 MA, number one. If you want to buy it right or right out long, at least over the 200 MA, and maybe add over the 220.23, that would be a move to the range high of 242. Until then, the 100 MA seems to have held it. I don't think it's necessarily a short, but I don't want to really be long unless it clears the 200 MA. If this were to pull back to the 50, which was the old kind of resistance, and the gap fill, maybe I would try it as a row trade intraday. The ideal scenario would be a pullback to the channel low into the number, and then either it's going to break down and it's a go with, or it's going to be back to the upside and a go with. So I think earnings may be a go with this time. Even though here there was the breakdown, you just had a couple of days of follow through, and then it was sort of back to the upside. I think this stock is really looking to build a base. You can see moves below. It's been making some higher lows and equal highs. So I think you really just need to see this 119.30 clear. And then what was the high day here? 120.23. I'm sorry, 420.23. 420 with a fast food stock. I wonder that's cute, right? So I need to see that clear before I get really hopped up on the Chipotle. MBLY, we'll end on MBLY. I was bullish on this stock on the breakout. It ran a lot. You got over the highs, and people use this gap to sell. That's not good, right? You don't want to see that kind of a move. I think I'd be interested in a pullback maybe to the 10-day. Look at where that was restraining it from, and that's where it broke out from. It's been holding. So if there was a quick pullback to somewhere between the 10-day and the 200, which is this kind of range high, I might sell some near-dated out-of-the-money puts at like the 50 MA strike. Because look, that was really where this really broke down from, and that's been the major resistance. It should be support now. And that's where I could even play put ratios, buy like some of these, sell 2 times out here, or I don't know if you'd have that. I have to check the juice, but I like the idea of the 50 MA being a long spot, particularly if it were to like work its way up and coincide with like this reference low. But as long as it's above the 10-day, if you're still long, I guess you could kind of hold it, try it for a right or right out. I like that for a day trade, for at least for a bounce, but 50 MA to me would be a lot more interesting. We'll see how that plays out. Anyhow, that's my story. I'm sticking to it. If you like this video, hit that thumbs up. Leave me some comments. By the way, please favorite and retweet the videos if you if you're a fan. If not, don't. So this will be yeah. Anyway, that's it for the video. Let's end it there. It's been a little long enough. Have a great rest of our week. I will likely be doing Periscope on Wednesday or Thursday. We'll see how my week plays out, but I'm going to try and shoot for Wednesday. So have a great rest of your weekend, and cheers.